It is my privilege to walk through the financial performance of Tolins Tyres Limited for the year ended March 31st, 2025. This year was significant not only because of our successful listing in the stock exchange, but also because of the strong performance we delivered across all key financial metrics. Our revenue performance. Our consolidated revenue from operations stood at 2,924 million, reflecting a growth of 29% year-on-year compared to 2,272 million in the previous year, 2023-24. This growth was driven by robust demand in both our tire and retailing divisions. Exports continued to strengthen, contributing about 6.4% of standalone revenues, with steady traction in the Middle East and Southeast Asia. Profitability. Turning to profitability, our EBITDA increased to 558 million compared to 464 million in FY24, while margins softened slightly to 19.07%. This was primarily due to input cost volatility. Importantly, our profit after tax surged by 49% to 387 million compared to 260 million in the previous year. This translated to a PAT margin of 13.23%, up from 11.45% in the previous year. This strong bottom line growth demonstrates the effectiveness of our cost and operational efficiency measures. Shareholder value. Earning per share rose to 10.87 rupees compared to 9.52 in FY24, signaling improved returns to shareholders. Our return ratio remains healthy with return on capital employed at 15%, reflecting that our capital is being deployed productively and efficiently. Overall, these results show that profitability gains are translating into tangible value for you, our investors. One of the biggest highlights of the year was the strengthening of our balance sheet. Borrowings came down sharply from 788 million to just 167 million, significantly reducing leverages. Liquidity also improved substantially. The cash equivalents rising to 282 million as on 31st March 2025 compared to only 9 million in the previous year. This gives us the flexibility to fund growth while remaining financially secure. Strategic outlook. Looking forward, our focus is clear. We aim to raise capacity utilization progressively to 75%, expand our product portfolio with sustainable and EV compatible tires, and deepen both our domestic and global presence. We will continue to follow a conservative financial strategy, maintaining low leverage while reinvesting in growth. In short, our balance sheet today is stronger, our profitability is higher, and our future opportunities are higher than ever before. In conclusion, FY25 has been a year of strong financial consolidation and renewed growth momentum. On behalf of the finance team, I thank our shareholders for your trust, our employees for their tireless efforts, and our leadership team for their vision. With your continued support, Tolins Tyres is well positioned to deliver sustainable growth and long-term value to all stakeholders. Thank you all.
First, we'll answer the question of Mrs. Celestine Elizabeth. So basically, she asking a few questions about where are the plans we have. We have 3 factories manufacturing rubber products. Basically, one factory is the main factory, that is Tolins Tyres Limited, that is in Cochin, that is manufacturing pre-cut red rubber and other tire retreading materials. And along with that, we have a product line of tires for two-wheeler, three-wheeler, and light truck tires and agri segment. Our main competition are from one factory here in Kerala itself. They have the major, they are the largest in the country. And then we have few other companies in the listed space. One is operating from in the Himachal Pradesh, another factory we have in Coimbatore. Like that, we have few competitors in the same in tire trading industry. Whereas in tires, we all know that there are a lot of tire majors in our competing in the market. Then the question was about the capex. So we have sufficient capex for expanding our capacity, our production capacity. We are utilizing almost around 40 to 50%. But in the next few years, we are planning to optimize that capacity to the level of at least 75% in the next 2 to 3 years. So the verticals of growth will be basically, we will grow both our verticals in the retreading as well as the new tire range parallelly, because we don't see that there is any challenge in promoting both the verticals, because the retreading is growing at a very good pace. Currently, the retreading industry is in our country is estimated at a value of around 600 crores business per year. Same in the tire, we all know the volume. So the 600 is estimated to grow into the next 2-3 years to 800 crores. So definitely that industry is also a very attractive industry. So we will grow both in tire and tread rubber at the same pace. Mr. Keshav Garg's, I think more are on the numbers. CFO sir, can you just go through those numbers? What I think all these are there in the presentation, but still, if you we can go for some of the numbers on that.
Chairman sir, Umesh.
Yes, sir.
Chairman sir.
Sir, you're audible, sir. You can speak.
Yeah. Just to add to whatever the chairman had replied to Madam Maskarna's questions, and one question that probably she was prompting to be replied was on the dividend. Madam, basically this is a very excessively charged sector in terms of the working capital management. And after 35 years of history of the company has first become debt-free only in the last fiscal year. And that too, a year where we have recorded the highest levels of revenue and profits. So there is a urgent and imminent need in order to conserve all the resources within the company in order to meet the growing working capital needs of the company. The company believes more in the wealth creation for stakeholders rather than the cash flow based dividends. But of course, your point is well taken, and this will be certainly kept in view while assessing the requirements of the shareholders, etc., in the ensuing years after fully meeting the working capital requirements, what is required for future growth. Thank you.
Thank you, Shankarji. So I left that answer because she was asking for at least next year you will be considering for the dividends. So I left it like that. Yeah. Thank you, Shankarji, for updating. CFO sir, you can just go through the Mr. Keshav Garg's.
Sir. Yes, sir. So, Mr. Keshav Garg sent very long questions, list of questions, around 23 questions. So I will try to answer few of them right now, and the rest of the thing we will send through email. So I hope that should be okay. The first question is regarding outlook for FY26, in terms of top line and bottom line. So outlook for FY26 is estimated 350 crores And a bottom line outlook of PAT is 46 crores, it's coming around 13% of the top line. The second question was EBITDA margins falling from 20% to around 15 in Q1 FY26. This fall is mainly due to change in raw material costs, basically increasing input raw material costs. Mainly of that, we hope this will material prices will come down in the coming quarters, so we will recover those fall. Then one question was sustainable EBITDA. Sustainable EBITDA is around 17 to 18% will be the sustainable EBITDA at current market situations. And another question was a realistic utilization target for FY26. On the tire and PCTR side, we are expecting around 50%, and the PCTR side around 58% utilization in FY26. So this is a question on strategic acquisition under active consideration. In FY26, we are not planning for any strategic acquisition. In future, that may happen. There is a question regarding profitability compared to the other competitors in the market. This is mainly due to our backward integration and the product mix, and the most profitable operations from the subsidiary company all adding more profit to our operation. So remaining questions, we will answer through one email because it's a question very long piece there. So we'll answer through email in detail to you. If that's okay.
With your permission, Chairman, I just add to one question which was raised on the impact of GST on all these products. In fact, if you have noticed, there'll be huge demand in the automotive sector. So definitely our company has a huge share, especially so you can expect some sort of good buoyancy in the coming years. So the impact of GST is going to definitely help the company moving forward. Thank you.
Sifu sir, can we go ahead or do you have anything to say?
We'll answer, we'll send a detailed email because 23 questions are there. Is that okay?
Yes, sir.
Okay.
Thank you, sir. I trust that you have responded to majority of the questions raised by the shareholders.
Yes.
The remaining questions will be answered through the emails to the respective shareholders.
Yes. Okay.
And if more clarifications are required, you are welcome to get in touch with me through cs@tolins.com. As all the items of the business as per the AGM notice have been taken up, the proceedings of the AGM have been concluded at 5:08 5:08 p.m. and I declare the meeting closed. The e-voting facility will remain open for the next 30 minutes to enable those members who have not cast their vote would like to cast their vote. The result will be announced on or before 2nd October 2025, and the same would be intimated to stock exchanges and uploaded on the website of the company.
Particularly special, as it marks our very first AGM since becoming a listed company. Tolins Tyres debut on stock exchanges was not just a milestone in our journey, but a historic moment that reflected the trust you, our shareholders, have placed in us. That trust strengthens our responsibility to build a stronger and more sustainable and more transparent company for the future. The year 2024-25 was one of transformation, resilience, and growth. Despite global headwinds and volatility in raw material costs, we delivered a strong performance. Our consolidated revenues rose by 29% to over rupees 2,924 million, and profit after tax grew by almost 49% to rupees 387 million. Our EBITDA crossed rupees 558 million, reflecting both operational discipline and financial prudence. Importantly, we reduced our borrowings from nearly rupees 788 million in the previous year to just rupees 167 million, which speaks to our commitment to building a leaner and stronger balance sheet. Beyond the numbers, this year was about strategic progress. The success of our IPO has given us fresh resources to accelerate growth. We also invested in product innovation, launching tires for electric two-wheelers with low rolling resistance, a testament of our R&D strength and readiness for the future of mobility. Our international footprint has continued to expand, with exports to over 40 countries. The Middle East, Africa, and Southeast Asia remained strong markets for us, and we are confident of further growth in these regions. At the same time, we remain committed to strengthening our presence in India, deepening our partnerships, and to reach customers across both urban and rural markets. Sustainability has always been at the heart of Tolins. I am proud to share that our manufacturing plants are now powered entirely with biofuels, making us one of the pioneers in renewable energy-driven production in tire industry. We have implemented closed-loop water recycling systems, ensuring that every drop is reused, and we continue to promote retreading as a sustainable solution for the future of mobility. By giving tires a second life, we are reducing waste, lowering raw material consumption, and offering cost-effective choices to fleet operators. Looking ahead, our strategy is clear. We aim to progressively raise our capacity utilization to 75%, expand our product range, and enlarge our presence in both domestic and international markets. Above all, we will continue to integrate sustainability into every aspect of our operations, from responsible sourcing to circular economy practices, ensuring that growth never comes at the expenses of our planet or the communities around us. None of this would have been possible without the dedication of our employees, the trust of our customers and partners, and the confidence of you, our shareholders. On behalf of the board, I extend my heartfelt appreciation to each one of you. As we reflect on our journey from a very small tread rubber manufacturing unit in Kaladi in 1982 to a global brand listed in India's premier stock exchanges, We remain guided by the vision of our founder, the late Sri K.P. Varki. His belief that an Indian company should stand shoulder to shoulder with the world continues to inspire us today. The road ahead is filled with opportunities and with innovation as our engine and sustainability are as our compass. Tolins Tyres is ready to drive forward with greater strength than ever before. Together, we continue to build a company that is resilient, responsible, and globally competitive. Thank you. Jai Hind. Now I